Welcome back to another episode of Stock Market Indicators. Today we're going to be talking about the 30-week moving average and how the price behaves. We're also going to take a look at a couple indices. We're going to look at Bitcoin as an example. I'm also going to explain to you guys the 4 stages that the stock market moves within its specific given time period. But before we do that, I want to show you guys this beautiful quote, which reads as follow: if you can't take a small loss, sooner or later you will take the mother of all losses. And I'm 100% sure many of you can relate to this quote, so keep that in mind. The 4 stages that are in the stock market is stage 1, stage 2, stage 3, stage 4. Stage 1 is accumulation. It's a period of accumulation when the price is going sideways, ranges in specific, moves in specific range. Later, the price jumps above the 30-week moving average, transitions into stage 2, which is an uptrend. Later, the price goes into distribution, where very often hedge funds sell the stocks or whatever they're selling to retail because 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 that's how it happens. And then later on we move into stage 4, which is sell-off, which translates into stage 1. And then everybody learned this year, 2022, since the beginning of 2022, that the stage 4 has a duration just like the other 3 stages. Impatience or lack of recognition of stage 4 is very dangerous because we are fighting the trend. This is the stage where buy the dip comes through. The idea of buy the dip comes through. Later on it transitions into DCA, which stands for dollar cost averaging, because this is the retail's way to make themselves feel better for the stupid mistakes they've taken over here in buying the dip, and for the lack of recognition of stage 4. The, the, the perfect DCA approach should be in stage 1, where the price is ranging sideways, specific price range. This is the price where you accumulate. This is the price where this is the stage where you buy for another, for a couple weeks, couple months, year or so. Different stocks, different indices have different time frames in specific stages. I'm gonna try to pull up Tesla in a second to show you guys that stage 1 of Tesla lasted about, if I'm not mistaken, 7 to maybe about 10, 11 years. So this is why it's important to slowly accumulate in stage 1, and then once we move into stage 2, eventually step up on the purchases, double down, triple down, quadruple down on the purchases to catch as much as possible stocks in stage 2, because the follow-up result is move to the upside. And this pattern repeats over and over and over again in the stock market. And very many people are aware of this pattern. A common mistake is thinking that the initial move from the investor breakout from stage 1 to stage 2 is overbought. And it's true. On the daily candles, when we move from stage 1 to stage 2, very often the MACD is overbought, overbought. Same thing with RSI, Relative Strength Index, which probably sits, in the zone of 70 and above. Same thing with MACD. But this is a recency bias from the previous stage 1 price action. Instead, this is actually a signal for buying. when we are in overbought conditions and the price is above the 30-week moving average. Many people think they've missed the stock, and if a stock is up nicely during its stage 2 breakout, and we still have somewhere between 1 to 2 to 3 weeks to catch, to double down, triple down on the specific stock, to make our position much bigger, because retail is, I mean, so many people are attracted to buying the top after about 40 to 60 weeks in stage 2, and that's about 1 to 1.5 year into the uptrend. Majority of the move, majority of the gain, 3/4 or 95% of the gains is just behind us. And then what's next is just the stage 3 distribution, where retail accumulates, thinking we're gonna have a nice break above, but the hedge funds, the smart money, is actually dumping the stock to retail, which buys, and then eventually we move into stage 4, where everybody that bought in stage 3 or at the top of stage 2 is back holding specific stock. If you're an investor, this is your ideal buy entry. You have a sell-off stage 4, you have accumulation stage 1, we have a break above 30-week moving average, and this is a time when you double down, triple down on purchases of your given stock. Another photo I want to show you guys is ideal buy entry for a trader, where the price is above the 30-week moving average. It's giving you some sort of consolidation, and then break above to the upside indicates more upside, potential upside. If we break below the 30-week moving average, expect some sort of sell-off to the downside. Now let's take a look at Bitcoin and take a look at this, guys. Take a look at this yellow line. This is the 30-week moving average. Okay. Isn't this similar? We have stage 1 accumulation. We have break above our accumulation zone. We have break above our accumulation zone. Eventually, we moved into stage 2 to the upside, which lasted about, I would say, 434 days. How many weeks that is? That's about 55, 60 weeks. And how many people, I can guarantee you that a lot of people bought the dip over here thinking that we're going to go into another stage 2 continuation, but we moved from stage 1 to stage 2 into stage 3 distribution, where a lot of hedge funds were selling, dumping, and then transition into stage 4. Very dangerous. I'm sure you guys can recall or go back to YouTube and see plenty of people screaming to buy the dip because this is a lifetime opportunity and we're going to go into another bull market run and blah 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 blah. But eventually we dropped more, than 65% from upside to the downside. So now what we should be expecting is another stage 1 accumulation, where the price is doodling sideways, okay, for a specific given of time. How long? Nobody knows. It can be years, months, it can be forever. It can be forever. So keep that in mind, guys. Hopefully this opens up your eyes and calms you down from ration your purchases from making irrational purchases. Let's take a look at Tesla. And this is what I'm talking about. Same beautiful scenario where we had accumulation stage 1 for about 3 years. We moved into stage 2, which transitioned into stage 3 with a little bit of stage 4. But as you guys can see, we've been actually ranging, going sideways for a long period of time. The price never went anywhere. And then even though we broke to the upside stage 2, we had stage 3. Eventually we had a stage 4 back again. Quick stage 1. This is 2020 market crash in March, where Tesla moved into stage 2. Explosive move to the upside. Explosive move to the upside. Now we are expecting. Now we moved away. We did our own stage 3 distribution, which translates into stage 4 sell-off, and then we should soon see stage 1 accumulation. When you look at the bigger picture, I mentioned earlier that this Tesla has been going sideways for a couple years, and it's true. Okay, because for 3,500 days, Tesla hasn't moved anywhere. Sure, you could have gained 3,000% if you bought back in 2010, sorry, 2010 or 2011. But who did this? Who? Nobody. A lot of people have been saying that Tesla will never make it above, or will never start the production. Nobody's going to be purchasing electric vehicles. Elon Musk is crazy. These were the headlines that people been talking, trash talking Elon Musk. And then eventually, when we moved from stage 1 to 2, Tesla moved explosively. Within 2 years, we've made 1,300% gain. So hopefully this calms you down, guys, and gives you a bigger, broader perspective from a bigger time frame of the stock market. And as you guys know, we are market selling off. We are in bear market. Okay, things are doodling around. SPY, QQQ, IWM. As you guys can see, SPY has been trying to do its best to stay above the 30-week moving average. In the previous close, we are having somewhat similar price action. Okay, similar price action over here, where your ideal purchase entry was somewhere around 393 for a minuscule small gain of 3% as of now. But later on, we're going to learn about different stock market indicators to give us a better picture of things being a fake out, because I believe we should be seeing more downside, much more sell-off, for the fact that the yields are inverted for a long time, and I know for the fact that once the yields return to its normal position, where the 3-month is 3.5 and the 30 year is 4.2, where things are reverted the other way around, because as of now we have the small The small yields are higher, and the longer yield curves are smaller. So once things revert, we should see a big sell-off, and eventually after the big sell-off, when the price goes back above the 30-week moving average, we should have a healthy stock market bull run. As of now, for me, this is a fake out, but this is my own opinion. Okay, this is my own opinion. This is I'm not here to preach to buy stocks or short or sell. This is just something to give you guys a better or bigger perspective and to prepare yourself to catch these moves to the upside. This is another beautiful example where we had massive run to the upside, break about 30-week moving average, sell off, retest, and then eventually we started the healthy bull market where you could have made easily 50, maybe 55%. This is a nice price action to accumulate something over here slowly and gently because nobody knew. Nobody knew that we're going to move back above the 30-week moving average so quickly. This could have been easily another 2000 scenario or 2008 where we've been doodling, faking, and then just keep on dropping down to the downside for another year, 2 years, 3 years, 4 years. This is a freak situation, V-shaped recovery, which where we have a drop down, drop up again, and continuation. Now let's take a look at QQQ. Same thing. QQQ is below the 30-week moving average, 292.37. As of now, we are 292.55, so we're a couple cents away. If somebody's watching this on Monday, you have a nice, beautiful entry to the upside, entry to buy to the upside with small stop loss to the downside, because once we break down to below the 30-week moving average, it's a beautiful opportunity to open your short positions for massive gain to the downside of around 10, 15, 20, 30%. Who knows? Take a look at this beautiful move of 25%. Okay, we have break above the trend line, this peak, so this is your sell position over here. So if you bought over here and you sold over here, easily you made 21% within 182 days. Okay, another opportunity, buy above, boom, 82%. Okay, let me go 95 because I'm narcissistic. So guys, as you guys can see, this is very, very important. So please pay attention to this. Put this 30-week moving average into your own indicator. This is TradingView that I use. I'm gonna drop a link below. I'm also gonna drop down below WeBull. It's a trading platform that I use to buy stocks, only to trade, and TradingView to do my drawings, make my decision, and help me navigate the stock market. Let's take a look at IWM. Same thing, guys. We have a nice break above the 30-week moving average. Let's take a look at Dow Jones Industrial. Fantastic, fantastic move to the upside. This is your beautiful entry. As you can see, we haven't even retested. All we did just keep on pushing to the upside. Easy, 7.5% within 35 days. I'm also gonna include this stage analysis screener in the description below. So please take a look at this. All credit goes to screener.nextbigtrade.com. As you guys saw, stage 1, we have QQQ. Still below the 30 week moving average. SPY, stage 1, similar situation. We just broke above it, okay? IWM, stage 1, same thing. Doodling just slightly above. And then Dow Jones Industrial, stage 2. Clearly stage 2 with a nice volume and then resistance to the upside. And then as you guys can see, Dow Jones is in third week of stage 2. So we're not too far off from buying, from having a beautiful entry, because if Dow Jones is truly in a bull market, we should see continuation to the upside. Thank you so much for checking out the video. I know it's been a long video. I'm gonna try to cut it a little bit longer, shorter, longer. What I'm talking about. I'm gonna try to make them smaller, much more to the point. As of now, I'm just talking a lot. One uh, favor to my best friends named Julio and Imaldo, also Sam. If you guys are watching this video, please give me a thumbs up emoji in your comments, or please comment below. This tells me that you guys are watching the video till the end. And if you're nuts, then I know you're nuts and you lied to me. Because I think it's very useful and important information. So this is the place where our quote comes back again to its life form. If you can't take small loss, sooner or later you will take a mother of losses. And this is what I mean by taking mother of all losses. If you're not willing to take a small loss of 5, 10%, 17, whatever, sorry, not 17, if you take it 17 it's too late, a couple percent, shit can turn into a loss of 30%. Okay, and then let's see what happens later on in the next coming weeks. Let's see if we continue and move to the upside, or if we drop down below the 30-week moving average, because eventually this loss can turn itself into a 50% loss, where you're going to literally kaboom your portfolio. Guys, thank you so much for watching this video. I know it's been long. I appreciate it so much. Please give me a thumbs up, comment below, and I hope you've learned something very, very important that's going to help you protect yourself, protect you from massive, massive losses to the downside. Once again, thank you so much. See you in the next episode. Have a nice day.